Good morning, it's Chad C. from C Real Estate here in Richmond, Virginia. Oftentimes when I'm sitting down with a home seller, we will discuss the value of the property and then we'll do a little math. And I will show the seller, well, if we sell your house for this much, after all the expenses, real estate commissions, what you'll pay an attorney to prepare a deed, maybe some local taxes, a termite inspection, a well and septic inspection. After paying all this is what you'll have left over. And more often than not, the seller is happy to see that bottom line. They're excited about it. Every now and then the seller will ask me right after that, well, what about taxes? What kind of tax am I going to have to pay on the money that I make from the sale of my house? And more often than not, the home seller is thrilled to hear nothing. You'll pay no taxes on the sale of your home. And there are rules that make that so, obviously, and IRS regulations at this point are such that if you sell a house that is considered your principal residence, your primary residence, and that is defined as a home that you've lived in at least 2 of the last 5 years, if that's the case, you likely will not pay any taxes on the gain. Now, there are limits to that. And currently, the limits are $250,000 of gain. If you're filing single, no tax. If you're filing jointly, up to $500,000 of gain in most cases that you will not have to pay taxes on if you are selling your primary residence. Hasn't always been that way, and some people think it's still the old rules that we're playing by. And this was a long time ago, but when I first started selling real estate, the law was that if you sold your primary residence, you had to reinvest it in another house of equal or greater value or pay tax on the gain. There was an exemption if you were 55 or older, then you could sell it and not have to buy another house of equal or greater value. Hadn't been that way in a long time though. So if you sell your primary residence and your gain is under $500,000 and you're filing jointly, then you can keep that money, do whatever you want to with it. Go buy another house if you want to, but you will not have to pay gain or tax on that gain. So there are a lot of intricacies to that. There are obviously a lot more rules, regulations to consider, and your individual situation can influence your tax position, obviously, and you'll want to talk to a CPA about these things. And if you need a referral to one, we'd be happy to help you. But a little bit on gains on the sale of your primary residence today. Have a great one.